Jeremy, there's been a tremendous rise in evergreen or perpetual funds over the past few years. Why is that?
Look, evergreen funds are a great way for investors to access private companies. Institutions, large investors have been investing in private companies for decades. Evergreen funds just make it a much more accessible way for a much broader set of investors to do it.
And Bow River has the EVERX fund. That's your ticker. It's an evergreen fund. How is this different or similar to all the other ones out there?
Yeah, I mean, what we do at Bow River is we're a middle market specialist. What that means is that we focus on smaller and really mid-sized private companies. We think that's the best opportunity, not only for diversification to a portfolio of stocks, but also for the best returns going forward.
And your fund competes with those offered by KKR and Blackstone, some of the biggest names in the industry. So talk about how you compete with them, because there's a lot of private investments out there, but those are big name funds.
Yeah, look, I mean, I think our size is an advantage. If you talk about the biggest asset managers in the world, the Blackstones, the KKRs, the Carlyles, there's certain investments they can make due to their size, but we're a $4 billion boutique. And that allows us to really navigate these smaller, mid-sized companies in a way that a lot of our larger peers can't.
So you're nimble, but talk a little bit more about accessibility, because there's more and more competing for these particular deals, for these particular private companies. You know, how do you get in there?
Yeah, I mean, basically what we do is we've set up a vehicle where we're taking some of the advantages of traditional mutual funds. So immediate investments, diversification, lower minimums, and we package that with access to private companies, and that's how we do it. And
then how are RIAs using your fund as opposed to other funds out there?
Yeah, look, there's two things they do. One is they're saying, look, I want to own equities, public equity and private equity, and they're using us as a private equity allocation. The other thing is that private equity today is becoming the de facto small cap allocation. A lot of people are using us as their small cap exposure.
And they also want it in their retirement plans, their 401ks. How much progress has there been made on this particular track?
It's starting to happen. Look, the SEC has a mandate that they want to open up accessibility to private companies and private equity. 401ks are a huge part of that. So there's a lot of plumbing that's going to have to get changed in terms of record keepers and operations. But I think it will happen because people want their defined contribution plans to look like what defined benefit plans have been investing in for decades.
And then finally, can you talk about liquidity and cost? I mean, yours is a mutual fund. Maybe it's a little bit higher price than your normal mutual fund or an index fund. And in terms of liquidity, how quickly can you get in and out of your investments? Because you get some great liquidity in the mutual fund as compared to locking things up in a typical private equity investment.
I think what investors have to ask themselves is, do I need 100% of my portfolio 100% liquid 100% of the time? If the answer to that is no, even if it's 90% daily liquid, you can open up the investable opportunity set by owning private companies, even with that small sliver of your portfolio, and that should add a lot of value.
All right, well, thanks for coming on and talking about it.
Thanks, Greg.